Hi and welcome back to the channel. In this video, I'm going to give you 10 key points that I wish I knew before I started trading. Now, if you implement these key points, you will see dramatic change on your trading career or your trading journey. So make sure that you watch until the end. And whether you're trading stocks, cryptocurrencies, Forex, futures, options, it doesn't really matter. The principle still stays the same. So make sure that you watch until the end, and without wasting any more of your time, let's dive into the first key point, which is know your why. Know the reason why you're trading. Maybe, for example, you're trading to pay off your mortgage or your bond, which is the same thing. Let's say, for example, you're trading to pay off your bond or you're trading to pay off your rent each and every month. So that will mean that if you're trading cryptocurrencies, for example, which is open 24/7, you will have to make at least $20 each and every day, which is very doable even if you are a beginner trader. So that's the first key point, which is know your why, know the reason why you're trading. That will really help you to set your goals and obviously be able to reach those targets. The next point will be learning. Learning should be your best friend. Never get to a point where you're comfortable with what you know. I have been trading for more than 12 years, but even today, I'm always consuming new information. I'm always like thinking, how can I be, the first to know the next big thing, the next new trend? I need to be always on the know with regards to what is happening on the market. So never get to the point where you're really comfortable with what you know. Never get to a point where you think you are a genius. Always, be open to learning new things, because the moment you think you know it all, you're shutting down the ability for your mind to be able to consume and learn new information. Another thing when it's coming to learning, we need to be very careful with regards to where you're consuming your information from. Remember, anyone here on YouTube can pick up their phone and start recording, but you don't know how legit those people are. You don't know if they've got proven record. You don't know if they're trading on a demo account. You have no idea with regards to their intentions. So you need to be very careful to find a trustworthy and reliable source when it comes to the person that you obviously learning from. Our next point is to create a winning plan. Always analyze your trade with regards to what really went wrong. Let's say, for example, you've blown your account or you closed a trade on a loss. You need to go back to that trade and obviously look at what really went wrong and obviously take note of that, so that on your next trade you can make a better informed decision. Our next key point here is to find what works for you. So find what works for you, craft it, perfect it, and stick with it. So let's say, for example, you're trading cryptocurrencies. As of recording this video, there are more than 12,500 cryptocurrencies that are tradable on the market. It will be very insane for you to be trading all these cryptocurrencies. So you need to find what works for you and stick with it. For example, I'm only trading few cryptocurrencies because I've been able to have a look at these cryptocurrencies and analyze them. If you wake me up 12 o'clock midnight and you ask me about a specific cryptocurrency that I'm trading, I'll be able to tell you the direction of that specific cryptocurrency. Why? Because I've been analyzing this specific cryptocurrency for a very long time. So find what works for you and stick with it. The next key point here is going to be backtesting. Backtesting should be your best friend. Now, for those of you who have been watching me trading live, especially on TikTok, you realize that my predictions were very spot on. If I say to you, when a certain EMA crosses this one, this is what's going to happen on the market, it's because I really have looked at all the data from the beginning of that trading pair. So I know this is how the market behaves, especially on this specific trading pair. So backtesting is really important, so that you can test all the theories that you have about certain indicators and all that stuff. So backtesting should be your best friend. So the next key point I want to talk about is taking down notes. This is extremely important because as a trader, you may be taking 10 trades each and every single day. So by the time you close all your trades, you need to obviously look back at your trades and look at where you went wrong, where you went right, and you won't be able to remember everything if you didn't take down notes. So most traders will tell you that have a journal where you obviously writing down all your entry points and the reason why you entering the market. But because you can lose this at any given time, what I like to do is to create notes within my trading chart, because obviously if you are signed in on a trading platform, you will never lose that data unless you obviously lose your account. So what I like to do is to obviously create notes. There are tools that are available for you to take down notes within the trading chart itself. That will really help you as you go back on your trading history. You can see, okay, this is where I took the trade and this was the reason behind me entering that trade, whether you're going long or you're going short on that specific trade. So taking notes is a very, very, very good practice. Always do that, especially if you can do it on your chart. It's very, very important rather than writing it down, because you can lose this at any given time. The next key point here is getting a mentor, a legit one for that matter, because a mentor will really help you accelerate your growth when it comes to trading. I've been trading for more than 10 years. So if you're starting to trade today, that means you have to have 10 years experience for you to get to the level where I'm at today. However, if I become your mentor, you get to download everything that I have in my head, and instantly you know what I know. But if you try to watch YouTube videos and figure things out on your own, it's gonna take you a really long time, and you're gonna blow up a lot of accounts before you get to the level where I'm at, or other YouTubers who are trading professionally are at. So getting a mentor is very, very essential. But the tricky thing here is getting the right mentor, and those people need to be truthful and be transparent with what they do, and obviously do not sell you dreams, which is really difficult. We live in a world where everybody has a smartphone. Everybody can act like a Forex guru or a crypto guru, whatever the case may be. So finding the right mentor is extremely difficult. People have their own intentions on the internet. People are out here, maybe their intention is to sell a cause and obviously make money off you and not take you anywhere. And don't get me wrong, the information on the internet, if you're paying for the information, it's really great, because if you're watching videos here on YouTube, I might be teaching you the right information, but the issue is that you have to still connect the dots. For example, I've made videos on how to create a crypto wallet. I've made videos on what is a blockchain. I made videos on how to trade. I'm making videos now. I'm making a mini course on how to trade on leverage trading, margin trading, on all this stuff. So in order for you to really get it and understand it as a beginner, you need to be able to connect the dots, and that's going to take you a long time. So you may be watching a tutorial where I'm talking about a certain indicator and how does this indicator work. It's very easy for you to go and implement that on your trade, but you still don't know the strategy behind the indicators, the strategy behind how I trade and why I trade the way that I trade. So if you get a mentor, then you'll be able to download everything they know, and instantly you will have that level of information. That's why paying for information is very important. Obviously paying at the right place at the right time, and obviously paying the right price. So getting a mentor is very great. This next key point is extremely important, and that is controlling your emotions when it comes to entering or exiting a trade, or in general. This is what I mean. Let's say, for example, you're a beginner and you've blown 3 accounts, or you lost 3 trades in a row. The wrong thing you can do here is trying to recover the funds that you lost. Once you lost something, you can never recover it. Once you lose time, you can never recover that time. The same with money. Yes, you may make more money in the future that can compensate for everything that you lost in the past, but you can never recover what you lost. You need to get that in your head, that you'll never be able to recover what you lost. But what do I mean by this? Let's say you lost 3 trades in a row, or you blown your account. Now, if you enter on the next trade with the mindset that you need to recover what you lost in the past, you are putting yourself in a very critical condition, because what if you also lose the next trade? That means that the next trade you're taking, you'll also be trying to recover what you lost. That obviously increases the risk that you're going to be taking, because you're going to be over leveraged. You're going to be obviously trying to recover everything that you lost in the past, which exposes you to even a bigger risk of trying to recover the things that you've lost in the past. So if your goal was to make $20, but you actually lost $100, it's fine. The next trade you take, still make your $20. You will obviously make more money that will compensate for everything that you lost in the past. But don't enter into a trade with the mindset that you want to recover what you lost in the past. Like I said, you can never recover anything that you've lost in the past, whether it's time, whether it's money, whether it's relationship. That's funny, I'm talking about relationships, but anyway, that's the idea here, that you will never be able to recover anything that you lost in the past. So you need to put that in your head. That will really help you with regards to clearing your head and be able to move on to the next trade. Otherwise, you're gonna keep blowing accounts, because the next account you fund, you're trying to recover what you lost in the past, and obviously that will increase your risk. You're gonna be over leveraged and all that stuff. That will expose you to even a bigger risk, because now you're trading with emotions. Remember, you need to always stick to your plan. The next key point I want to talk about is the power of compounding, and this is directed towards small account traders, because if you make a little bit of money today, it doesn't necessarily mean that you have to withdraw. You need to obviously be able to build your account to a point whereby you can increase your risk, obviously increase your leverage, so that you can obviously make more money. But if you're going to make $100 today and you withdraw, that's $100. Tomorrow when you're placing a new trade, you're still back to where you were previously. So you need to be able to compound your account each and every day, so that you can obviously grow your account and obviously make more money. Our next point here is to be patient with yourself. Remember, slowly is the fastest way of getting to where you want to be. Spend time educating yourself and be patient with regards to the growth that you're having. Even if you're making $10 a day, that's a lot of money for a beginner, because this is something new, and as you keep progressing, you'll be able to make more money in the future. But learn to be patient with your small winnings, appreciate your small wins, so that you can obviously grow. The next key point I want to talk about is greed. Not only that, but also fear of missing out, because fear and greed goes hand in hand. So you could be on the trade and you're up 200%. You're up 200%, and you're like, okay, it's going to continue to go up. But what you don't realize is that what you have on the platform is unrealized profits. So once you have unrealized profits, anything can still happen, because you haven't closed those trades. So at least if you think the market is still going to go towards the same direction, close at least 20%, 50%, even 100%, or rather 50% of your actual gains, so that you can obviously keep something as a realized profit. I have made those mistakes myself, whereby I'm seeing my account is up 200% and I don't want to close it, because greed is in control. Greed is in control. I want to make more money. I want to make more money. But it is extremely important to be content with what you have and be able to discipline yourself enough to say, you know what, I'm going to take some profit right now. So it's very important to always take profit. Remember, unrealized profit is not profit until you close the trade, and that profit becomes realized profit. If you watch until this far, I really appreciate your time, and if you enjoyed this video, I really appreciate it if you can smash the like button, subscribe if you haven't already, but do not exit the video just yet, because if you enjoyed this video about the 10 key things that I wish I knew before I started trading, then you're probably wondering, especially if you're a beginner, you're probably wondering, how much do you really need for you to start trading and making money on the market? Well, I cover that on this video, so go ahead and click on that video so that you can obviously look at my perspective with regards to how much do I believe that you really need in order for you to be successful on the market. So go ahead and click on that video. I'll see you there. Goodbye for now. Peace.